Alright everyone, Cowboy Trades here, welcome back to the channel for another update. So you read the title of the video, institutional money is currently flowing into Bitcoin right now, and we're going to talk about exactly that in today's video. Today is going to be less of a TA video, more of me sharing my thoughts on what this liquidity coming into the market is, what smart money is doing at this moment in time, what's happening in the news, and we're going to tie the news back to smart money entering the markets right now and what that means for Bitcoin, the ETF, all of that and more. So let's dive right into this. Now, some of you may have noticed in the past week or so that the Bitcoin CME futures have been trading at a slight premium because of the fact that lots of volume is stepping into the futures market for Bitcoin right now. It's been relatively small, unnoticeable amounts for the past week or so. I have been noticing this for the past week or so, but I haven't said anything until today because this is where we really saw that big increase. For example, if we go back to about a week ago when I started noticing this strange discrepancy, if we look at the high that happened over here on Friday the 8th of December, you can see over on the CME markets, Bitcoin hit 45,300. If we come over to regular exchanges, you'll see Bitcoin only hit about 45,000. In fact, pretty much most of the exchanges that I have charts for over on TradingView all topped out at around about 44,700, meaning this was, starting off as round about a $600-700 discrepancy. Now, this has started to get a little bit more euphoric in the past couple of days. Now, as you can see, we're starting off 2024 with a blast, just like we talked about in our previous videos. We were saying, coming into the first week of 2024, that's when we really think the markets are going to start warming up. So short term, I am still expecting for the markets to come back up to the upside. Bitcoin today managed to push up to 45,900, almost hitting 46,000. But what happened over on the Bitcoin CME futures? Well, these hit 47,120, meaning this was about a $1,200 difference between the price of Bitcoin over on exchanges and the price of Bitcoin on futures. Now, while this only represents about a 3% difference between the two, this, you've got to bear in mind when we're talking about hundreds of billions of dollars right here, that 3% is a large amount of money. That is a large discrepancy between the Bitcoin CME futures and Bitcoin on exchanges. So let's dive a little bit further into this. Now, if you're not familiar with this chart over on my screen right now, this is the Bitcoin CME futures. This is a futures-based paper Bitcoin derivative. Basically, what that means in layman's terms is it's a futures contract on Bitcoin. It allows traders to get exposure to the Bitcoin price, but this particular future doesn't hold any physical Bitcoin. So for example, over on the Bitcoin CME futures, let's say $1 trillion flows into the Bitcoin CME futures right now, which is exponentially larger than Bitcoin's entire market cap. In theory, not in practice, but in theory, Bitcoin's price wouldn't even move by a cent because the Chicago Mercantile Exchange, they don't own any physical Bitcoin in their futures contracts. So once again, if you're buying the Bitcoin CME futures, this allows you to get exposure to Bitcoin, but it doesn't actually mean that you hold any underlying Bitcoin. So what's been going on here? What is happening with the discrepancy? Why is Bitcoin on exchanges at a certain price, but Bitcoin on futures contracts is trading, somewhat exponentially higher? Why is there exponentially more volume coming into futures contracts right now? Why is there, far more book depth? There's a large amount of bids and asks compared to what's been happening in the past few months. The spike that we saw in the past few days or so is the largest volume spike that we've seen in Bitcoin futures in quite some time. Now, I want you to think about this for yourself for a few seconds before I tell you the answer, but why do you think a trader might opt in for purchasing Bitcoin futures contracts rather than buying the actual underlying asset Bitcoin? I'll give you a few seconds. 1, 2, 3, pause the video if you want to think about it more. Well, let me explain it this way. Buying Bitcoin on the CME futures grants you exposure to the price, but it doesn't actually mean that you're affecting the physical price of Bitcoin because you're not changing any supply demand dynamics. You're not taking any Bitcoin off the market. So let's say, for example, you're talking about meme coins here to, put it in terms that we could understand. Let's say you're a Solana degenerate. You've got your favorite meme coin. It's only got $1,000 market cap and liquidity is $100. And you want to put, 1,000 extra dollars into this new meme coin. Well, what do you think is going to happen? If the market cap's 1,000, you want to put in 1,000, that's going to increase the market cap by 2x, right? But what if there's only $100 worth of liquidity in that particular meme coin. Well, what's going to happen? Is the price going to go up 2x? No, there's not sufficient liquidity. There's only $100 worth of liquidity and you want to put in 1,000. That means the price has to trade exponentially higher for you to get all 100 contracts or $100 worth of that particular meme coin. So while the market cap could go up a 2x or so, if you're putting in these large amounts of money in a small market cap, that's going to mean that the price is going to go up dramatically. And if you're trying to accumulate, if you're an institutional investor which wants to get access to the price fluctuations in Bitcoin without having to worry about the underlying asset, this is one thing that you could do. Another thing you could do, which once again, by the way, this is why we're seeing, in my opinion, the spike in volume in Bitcoin futures. This isn't a phenomenon that I've created in my mind. Bitcoin on the CME futures is one of the largest ways that institutional investors gain access to the price of Bitcoin. This would potentially explain why we've been seeing the price of Bitcoin dramatically increase to the upside. But when we're looking at whale wallets, they haven't been, seeing new increases to the upside. Now, one theory on this, once again, it's a theory. We don't know anything for sure, but let's say, for example, if these wallets with 1,000 Bitcoin, let's say they wanted to sell, they wanted to take their profit from the previous cycle, instead of selling on the market, instead of going to Binance and selling their 1,000 BTC and having one less wallet on the Bitcoin on chain, why would they not just go OTC? If someone, let's say Michael Saylor, was willing to pay a premium for that Bitcoin, well, of course, they're going to go for the premium. If someone's happy to pay an extra 1, 2, 3%, which very often happens on OTC, you pay a slight premium. You don't have to deal with spot. You don't have to deal with Binance. You don't have to deal with all of that stuff. You just go to someone else. Someone says, hey, I've got 1,000 BTC. Don't want to put it on an exchange. Do you want this 1,000 BTC? If so, give me $1 million. I'm not going to do the maths in my head of timesing the current price of Bitcoin by 1,000. Let's say it's $1 million. They're going to say, hey, Michael Saylor, give me $1 million. Here's the 1,000 Bitcoin. Well, that 1,000 Bitcoin address is still on the network. It never, in theory, sold, or if it did sell, it just moved into a new wallet with a new holder with a new seed phrase. So this is just one example that I can think of. There's plenty of volume. There's lots of liquidity flowing into futures right now. There's a discrepancy in the price of what's happening on futures contracts. There's more volume coming in. There's more liquidity for futures contracts right now. And we're going to talk a little bit more about why that could be when we finish off with the news of today's video. But moving on from here, in terms of Bitcoin, like we talked about, starting off the year with a bang on the daily time frame, Bitcoin stock is turning up. If you have been watching my videos, you know that I think Bitcoin has some healthy room to grow to the upside at this moment in time. My price targets are the same as before. We've got resistance up here at 48,450, and we've also got this massive Bitcoin CME gap up here at 53,700. Once again, if you're relatively new to CME futures, if you don't understand the Bitcoin CME futures and you want to learn more about them, this is actually one of the most popular educational videos I've made on my channel. This one here, Bitcoin CME Gap Explained. I talk about the CMEs. I talk about why we have the CME gaps when trading doesn't occur over the weekend. What does it mean for price action, etc. If you want to learn more about that, go check it out. The gist of it is that Bitcoin on the CME futures doesn't trade over the weekends. So if Bitcoin drops or pumps over the weekend, you create these price gaps where it wasn't trading over the weekend and now it starts trading boom over here on Monday. We've got this big CME gap, which by the way, often get filled. For the CME futures, this is up here at 53,700. This would be meaning from where Bitcoin is right now at 45,700, Bitcoin could move up about 17.5% before I'd be calling for a macro correction. And this doesn't mean, rocket to new bear market lows. It could be a healthy correction. We'll talk about that another time. We've already talked about this before in theory. And once again, because of the volume that's coming into Bitcoin futures right now, because institutional money is flowing into futures and that open interest is starting to spike, what does this mean? Well, it doesn't necessarily mean that Bitcoin on spot has to go to 53,700. It could go to 52,000 or 51,000. And if institutional money continues to flow into these futures contracts, we could see Bitcoin futures up at 53,700 and we could see that slight discrepancy. But moving on from here, if Bitcoin moves up 17.5%, I'm sure you know what that means for alts. Alts have been having a crazy run up recently. Very simple, swing high to swing low on the altcoin market cap from the bull run top to the bear market low. The next significant Fibonacci that I see at this moment in time is the 0.5 Fibonacci. I'm not really looking at this 0.32 down here. I'm looking at the 0.5. This is about a 34% 5% pump to the upside. This is one of the reasons why I've been kind of talking on the channel about why I'm very short-term bullish on things like Solana right now. I think they're going to continue moving up to the price targets we've talked about in our videos that we've done in the past week or so. But let's move on from here. Like I said, I really wanted to talk fundamentals. I wanted to share my thoughts and theories with you on what is happening in the markets today. Less of a TA video. That will be for another day coming in a few days or so. Let's talk about the news. Now, what happened in terms of the bond market? Now, I'm sure everyone's like, oh, God, Cowboys talking about the bond market again. Where's the next 100x meme coin? We'll be quick here. In terms of the 2-year bonds, 10-year bonds, some of the things on the higher end of the yield curve, not too much has changed in the past week. However, these lower term bonds, something very strange happened yesterday where on the 4-hour candles, we saw the 1-year government bond yield spike from 5.4% up 13.4% up to 6.13% yield for these government bonds. Now, that is new all-time highs in terms of the 1-year government bonds. And, what does this really mean for the market? Well, not potentially anything right now. It's just something interesting to look at. Could this be a glitch? Could this have been intentional? We don't 100% know, but what I do know is when you start to see short-term yields on the lower end of the yield curve start to spike up to the upside, and you see, the higher end yields, if that's the 2-year, if that's the 10-year, if that's the 20-year, while they're staying at these relatively, stagnating levels, while lower term yields are outperforming. What does this mean for the yield curve? Well, it means if we look at the yield curve on the 10-2, or if we just look at, the 10 minus anything, maybe it's the 10 minus the 1, basically the upper echelon of the yield curve, the 10 years, 20 years, whatever, minus the 1 month, 6 month, 1 year, 2 year, etc. If you're getting better yield in the lower end of the curve, that is probably going to mean that this yield curve is probably going to stagnate at these levels for quite some time until we see the lower end of the yield curve start to, dip back down again, decreasing below, what the higher end yields are offering. Then we're not going to see that reversion back to the upside of the yield curve. This is kind of when we're going to be predicting that a recession is going to be coming for the US. So we'll keep our eyes on this. Another thing that's quite interesting as well, which we'll glaze through, is Moderna is up 13%. The vaccine company, not going to mention too much about this, just a little bit suspicious. Let's move on to the VIX. The VIX right now has been having opportunity after opportunity to create new impulses to the upside. It seems like no matter what type of bearish financial news, economic data we have, the VIX spikes for a couple of weeks or so, and then it comes back down and makes lower lows. So one thing to note on the VIX right now is it is cyclical. It has had a dramatic drop from 23 all the way down to 11. If we are looking at the stochastic RSI on the weekly time frame for the VIX, I would say it's safe to bet that at some point we're going to see a spike of volatility, probably in the next 30 days or so. That's probably what I would guess. Maybe it's 2 weeks, maybe it's 3 weeks, maybe it's 4 weeks. We don't have a crystal ball. At some point, volatility is probably going to spike. Remember, volatility moves inverse to the equity markets. So if we just get rid of this, if we increase this, move this to the existing pane above, one thing I find easier to do is just to come over to whatever you're looking at. If they're inverse to each other, just invert the scale. So we're looking at the inverse S&P 500 and we're looking at the VIX. And now you see, now the S&P 500 is inverted. They have a beautiful positive correlation. So when we snap back to reality, S&P 500 is back on its head. You can understand that these have a inverse relationship. So what does that mean for the S&P 500 right now? The VIX, if we're looking at the stochastic RSI, is bottoming out. It's looking like it's ready to push up. If we're looking at the S&P 500, it's basically the upside down of the VIX right now. If you look at the stochastic RSI for the S&P 500, it looks like we're topping out. If we do not manage to get above this previous all-time high at 48,025, it's probably going to mean a major correction for the S&P 500. Now, previously, S&P 500 had a rising wedge here, bearish breakdown, retest, and we move back down to the downside for a pretty brutal macro correction. We could be doing something very, very similar right now with this rising wedge, the weekly time frame topping out over on the S&P 500, the weekly time frame, or the weekly stock rather, on the VIX bottoming out, rising wedge, bearish pattern breakdown, yada, yada, yada. Does this mean Bitcoin has to break down with the S&P 500? It doesn't necessarily have to mean that. In the lower time frames, Bitcoin's been kind of doing its own thing recently. Just wanted to point out, if you're an equity bull in the short term, just keep an eye on these charts, keep an eye on these factors. Now, the final thing I want to talk about today tying the end of the news segment today with what we talked about at the start of today's video, is what is happening with these Bitcoin ETFs. For weeks and weeks and weeks, months and months and months, we've been seeing, massive hype on Bitcoin around these ETFs. This ETF hype started around about 26,400, and since this ETF hype came about, we've seen about an 84% increase in the price of Bitcoin. Not really due to too many other factors, not really due to global net liquidity, not really due to much changes in volume or institutional investments until fairly recently. What this has been, largely attributed to is really the markets, thinking forward. They're kind of pricing in the ETF being, passed through already. Now, here's my thoughts on this. Every single ETF we're seeing right now, everyone, let's just say the Grayscale Bitcoin Trust Fund, every single time they submit an ETF for Bitcoin on spot, the SEC comes back and they're like, no, it's inadequate, send it back, it's garbage. And then they come back the next day. They come back within 12 to 24 hours and they're like, okay, we made an amendment. Can you check it out now? Can you check it out now? And they're like, okay, the markets are like, wow, Grayscale has made their 21st amendment to their spot ETF. Surely it's going to go through, right? The next day, SEC's like, no, it's not going through. And then they make their 23rd amendment. And then the SEC delays it for like 2 months. They're like, we'll check it out when we feel like it. 2 months go by, and then boom, what happens? Do the SEC approve it? They say, oh, okay, we don't want to accept it. It's not adequate. Send it back. The next day they come back and they're like, okay, we made these changes. Can you please check this again? Can you, please put through our ETF? 2 weeks later, they're like, should we check it out now? Delay it by like another week or so. No, not adequate. So yesterday, and if you look at places like, Watch a Guru, Bitcoin Magazine, I feel bad for, hopefully it's an AI which is posting all these news articles, but basically every couple of days or so, we're seeing Bitcoin Magazine's intern over on Twitter post another update about the amended spot ETF applications. Every single time they get rejected, the next day, without haste, these, ETF companies, they come out and they say, hey, we've amended it, please accept it. So it's seeming, in my opinion, pretty desperate right now. And I've mentioned this before on the channel. If an ETF does get approved in January, which is what a lot of the hype is going on right now, that's why Bitcoin's rallying so hard. That's one of the reasons why, at least. That's why institutional money's flowing in right now. There's lots of speculation that in January, really in the next week, this week, the markets are talking about, is an ETF going to be accepted? And that's why Bitcoin's rallying. That's why you're seeing hashtag Bitcoin ETF over on Twitter. That's why all your favorite YouTubers are talking about the Bitcoin ETF, which is going to be accepted after the 28th Amendment, right? Well, I don't particularly think so. And if we do see an ETF get approved, in my opinion, it's not going to be a spot ETF, it's going to be a paper ETF. What is a paper ETF? Once again, very similar to what the Bitcoin CME futures are. It grants investors exposure to the price, but it doesn't change any supply and demand fundamentals. If $1 trillion flows in to a Bitcoin paper ETF, not a single dollar of that 1 trillion that's flown into a paper ETF will go into buying physical Bitcoin. We need a spot Bitcoin ETF. That's what we need. In my opinion, if we see a paper ETF get released, sure, if it happens this week, if a paper ETF gets released, I'm probably going to see, hey, maybe this 10-15% pump happens, and then boom, nothing's going to change. Because, of course, I don't talk about this too much, but I actually have a private equity fund, CB Hedge. Now, I really, really wanted to put spot Bitcoin on that ETF. For a while, when I was, figuring out, how private hedge funds work, how to go public, I was really, really struggling trying to find every single way to put spot Bitcoin on my ETF balance sheet. It just doesn't happen. It's not going to happen. You can't. They're just not going to allow it. I don't think they're going to allow it anytime soon. I don't think the SEC, while they're cracking down on crypto, is going to say, hey, do you know what's a good idea? For Grayscale to have hundreds of billions of dollars worth of investors flock into Bitcoin, and they're going to put all of that money in a hardware wallet, which is going to be underneath, someone's bed. And then what if they do a SBF and, move to, I don't know, I don't even know where the guy went to, Hawaii or wherever he went to. I don't really care. He went somewhere. He ran off with the customer funds. This is one of the reasons why there's no laws behind these ETFs right now, especially on spot. Can a paper ETF get approved in January? Sure, in my opinion, 50-50. Is a spot Bitcoin ETF going to get approved? In my opinion, no. So let me put this way. I have a private hedge fund. I currently have GBTC, that's Grayscale's BTC Trust Fund. That's basically a paper allocation of Bitcoin because I want allocation to the price. You know, it's a large hedge fund. So if a paper ETF is going to get approved, even if institutional investors care, you know, for example, I'm not saying I'm an institutional investor, but I've got a private hedge fund. Am I going to be like, oh my gosh, I need to get out of GBTC and I need to get into this paper hedge fund, which does paper ETF rather, which does the exact same thing. It just tracks the price. It doesn't mean you've got any exposure to spot Bitcoin. I'm not going to care whatsoever. However, there are a lot of people right now, there's a lot of smart money, there's a lot of liquidity flowing in from institutional investors which are interested in getting exposure to Bitcoin. And I'm sure if a spot ETF gets approved, which once again, hate to be the bearer of bad news, just sharing my honest opinion, I don't think it's going to get approved. What happens if it does get approved? If a spot Bitcoin ETF gets approved, imagine all of the hundreds of billions of dollars which are currently in Bitcoin futures which are not affecting the price whatsoever, exiting paper Bitcoin contracts and holding physical Bitcoin. I don't think we're ready for that. I think we're a while away. I think in terms of security, the SEC, I think they need to understand the logistics. They need to understand how to regulate that. And I don't think they've quite wrapped their head around how they would even regulate that. I don't know how they'd regulate that. I think it'd be very, very difficult to regulate a spot Bitcoin ETF. Who has access to the hardware wallet? Can they just get that hardware wallet 24 words and just dip with, you know, hundreds of billions of dollars worth of money? There are questions that need to be answered. We don't have the answers. The SEC is coming out and saying this spot Bitcoin ETF is not, you know, appropriate. We don't believe this is going to be useful to consumers. We think this could be harmful. You know, we don't want to approve this spot Bitcoin ETF. You know, you guys need to figure out a solution. And then they're coming back the next day like, okay, what about this? What about this? What about this? What about this? I think, you know, the companies which are putting through these ETF amendments, I think they need to calm down. I think they need to plan better. I think there needs to be a coordinated, you know, ETF arrangement behind these firms. But I'm just talking at this point. That's my opinion. If an ETF does get approved, in my opinion, it's going to be a paper ETF, not a spot Bitcoin ETF. It won't affect the underlying asset. We'll see a short-term pump. It'll be a buy the rumor, sell the news event, and we'll start crashing back down to the downside, just like we saw when the ETF got approved in the previous bear market, somewhere around here. So that's just my opinion. Once again, more of a fundamental video, less of a TA video. So for today, my friends, that's all I've got. I'll see you very, very soon. If you enjoyed the video, you know what to do. Smash that like button, share the videos with your friends, leave a comment, you know, all that algorithm stuff. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. Follow me over on Twitter at 618_cowboy. It's been your boy Cowboy Trades. I am out. Peace.